and welcome to A-Team Group's webinar on cross-regulation data consistency and accuracy. My name is Sarah Underwood. I'm an editor here at A-Team Group, and I will be moderating today's webinar. Our expert speakers today are Steve Green, Executive Director and Head of EMEA Data Office at SMBC Corporation, Brett Utnick, Director, Head of US Regulatory Services at BMO Financial Group, and Peter Gagon, Founder and CEO at NTIA Financial Services. Unfortunately, Ling Yin, Managing Director, Head of Regulatory Policy and Implementation at JP Morgan, can't join us today as she's been called away from the office. That said, I'll ask our speakers to introduce themselves in just a moment. Meantime, some information on how you can take part in today's webinar. To the right of your video screen, you'll see a Slido panel. There's an area for poll questions, and we'll be running 3 of those in today's webinar. And also a section for questions. That's for you to put your questions there for our speakers. So please feel free to do that as and when you'd like to. We will answer the questions as we go along to make sure we give you as many answers as we can. Okay, enough from me, and let me ask our speakers to introduce themselves. Coming to you first, Steve.
Hi, all. I'm Steve Green. I'm the Head of Data, or Chief Data Officer for SMBC across EMEA. I've been there for about a year, leading all aspects of data across the bank. Previous to this, I was the Chief Data Officer at the FCA, leading all of their data collection and regulatory kind of collection activity.
Thank you. Over to you, Brett.
Yeah, thank you. I am Brett Utnick, Head of U.S. Regulatory Services for BMO Capital Markets. Been here building out the Reg Services team for 3+ years, nearly 4 years now. Long history of working for broker-dealers in regulatory spaces, amongst various others. Won't say how long my history goes back, but really excited to be here. Thank you all.
Thank you. And over to you, Peter. You've got your mute on there, I think.
Peter Gargone, founder and CEO of NTIA. I started NTIA back in 2000 after being in a number of firms in the finance industry. We're a regulatory focused data provider, and we help firms with the accuracy and completeness of their regulatory reporting.
Excellent. Thank you all very much indeed. And let's get started this time with an audience poll. The question is, how challenging is achieving regulatory data consistency and accuracy at your organization? So while you answer that question, let me come to Steve to set the scene and talk about the state of play on regulatory data consistency and accuracy across capital markets.
I think it's one of those interesting areas where all the regulators talk about trying to come together, and clearly with things like Basel, they've done so. But they're moving at different paces. So the US does not want to do any digital coinage anytime soon, whereas the EU and other nations start to think about what they can do there, Middle East particularly. The FCA has been pretty clear, and the Bank of England have been pretty clear around what they want to do about data-led regulation and getting more granular collections. And if you look at their work on the future of data collection, they're moving faster than most other regulators when it comes to how they collect the data. And that will be, I think, quite different with the new collections and how they are designed and delivered into the regulators. One of the things I know that they're talking about really is about how do new collections get pulled at, not necessarily the noise, at the most, not necessarily the most granular level, but certainly in a more granular level than they have done historically. And so trying to get that alignment between what the FCA and the Bank of England are doing and where the focus of the EU may be on digitalization more broadly is going to be an interesting challenge, I think. I think you've got some really good work that's occurred over the last kind of 10 years with some of the ISO standards. But at the moment, we're in a situation where no one quite knows what the next big thing is, because the 3 different, if I think of the UK different to the EU at the moment and to the US, their priorities are slightly different. What has been good, I think, is that Brexit, whilst there was noise and risks that the UK would move away, shall we say, is that that's not happening in practice. And it'll be interesting to see how that evolves over time as the UK tries to push for a more competitive regulatory environment and maybe starts to move away somewhat. But at the moment, thankfully, we haven't unpicked MiFID II. We've continued to do a EMEA refit, so at least across Europe, the alignment is still there. the one opportunity that certainly the regulators are hoping for, and we'll see how that progresses, is that as the UK looks at a slightly different evolution of its regulatory collections with the EU, there is increasing alignment with the US regulators. So certainly in my last year there was a lot more meetings around how regulatory collections can move forward and how the way we regulate can move forward between the US and the UK. So it's an interesting one where hopefully maybe the alignment has been particularly pan-EU at the moment with a few things around ISO work. Maybe that will change slightly as the US and the UK look to drive forward certain standards around the world.
Okay, lovely, thank you. Brett, what would you say there in terms of regulatory data consistency and accuracy?
Yeah, I guess when I think about this from a setting the scene perspective, the first thing comes to my mind is we are consistently inconsistent. I don't think there is a single shop out there who doesn't have something they could be doing better. That being said, I think the expectations of regulators have never been at a higher level. And the regulators also want things to a degree by region, which challenges that consistency because the mandates and the way to provide that information, while often the same or coming from the same places, can be very different. Looking from our perspective, obviously based out of the US, there have been a ton of SEC proposals coming down the pike. And I would say with a change in leadership relatively recently, we're still learning a little bit about where it's all going to go and how those proposals are going to take effect and become real rules, and what that's going to mean to all of us as financial firms. Those shifts do take time. And there's also the interesting dynamic, and not to be partisan or bipartisan here, but there's the political dynamics that fall above this all as well, where will that shift be impacted by the politics at play? And that's something it's challenging to us as a firm who are just looking to comply.
Okay, thank you. How true indeed. Let's see those poll results if we may. And Steve, perhaps you'd like to comment on these. Very challenging. What would you say to that, as you might expect?
Well, it's not surprising, is it? I think interesting what people don't always realize. I think those mid-tier banks probably find it the hardest because they don't have the scale or the volume to get after it. But unfortunately, their breadth means that they do have to deal with everything that a larger bank pretty much has to do. But it's not a surprise, as Brett said. There is a lot of inconsistency out there. There's been conversations for 10 to 15 years on making a more considered effort to align standards. And it's taken years to do some of the even fairly small ISO work that's been done around data standards. So, this is not an easy thing. And even if you look within the EU, and say, I would sit at ESMA talking about MiFID or EMIR or whatever, and it would take 2 or 3 years to do one collection, and to define each of the fields and to get the standards right. And so it's just very difficult. And that's before you then start to think about cross kind of jurisdiction legal terms. What is the definition of an SME? What is the definition of risk-weighted assets and things like that? It's just very, very difficult. So even if all the regulators wanted to, sometimes it's out of their hands because their legal framework is so different as well. So I think what we can hope for is that we don't move too far out of the way so that firms are collecting the right stuff, even if you have to tweak it slightly or you have to change the calculation or whatever. You would hope you can move forward in that direction over the next few years, particularly as I think where they've got different priorities at the moment. In 5 years' time, I suspect every regulator will need a position on Bitcoin that's known, a position on ESG that's known, digitalization that's known, and at the moment they're unknown. Okay. So hopefully, we'll start to come together on that basis.
Okay, that's great. So everybody's on the right webinar because these things are very challenging, and we're going to talk about perhaps making it a little bit easier and a little bit easier to work across regulations. With which, let me bring you in, Peter, and let's work out why regulatory data consistency accuracy is such a problem. Steve's mentioned some of these things. How do you see that?
I mean, the challenge has been growing over time, right? A lot of it comes down to that as they expand the regulatory requirements, they start to pick up and combine data sets from basically disparate systems and what really ends up being disparate operational processes across the banks, right? And, trying to pick up that data and put it back together in a consistent manner for regs is a challenge, right? Especially when you're going cross regs, because the data means different things under different regs. It's coming from different places. So you have this sort of large scale data aggregation combination process, which is just really hard to get right.
Okay. Steve, would you add to that?
Yeah, I mean, I think as Peter said, the problem now is you're inheriting systems that are often 20 to 30 years old. You know, even the better ones are 5 to 10 years old. And as the regulation moves dramatically, and as different regulators look for different levels of granularity as well, it's really difficult for internal organizations to pull that together. And whereas historically 10, 15 years ago, you would ask for your investment based purely upon the regulation, that becomes harder and harder as the work gets more complex. So, you know, and we'll talk about it later in the session, I think, is we have to start to look at how we can get value from it so that the scale of the investments can match the need from a regulator perspective, but you're offsetting that against real business value as opposed to just a compliance tick box, shall we say, because eventually it's going to break. You know, the banks will not be able to afford just to do regulatory reporting at an expensive level without really being able to leverage that data for their own uses as well.
Okay, excellent. Thank you both. And coming back to you, Brett, what data overlaps are there across local and global regulatory reporting regimes, and what are their nuances?
Yeah, so when looking across reg reporting regimes, data, to me, I think about it being shared at the product level, at the counterparty or customer level, and at the reference data levels. And the broadest shared elements come from a lot of that reference data where account information, you know, LEIs, EINs, legal names, addresses, account type flags, they all need to be consistent. And there's market data and security master details that also need to be universally understood and translated for eligibility, and attribute mandates coming from every single regime. And then there's even the transactional or event-based information, which is also required to reconcile, despite, you know, word of the day, disparate forms of data requirements by report, by SRO, by regulatory body. When I think of examples, there's also a lot of, based on, I kind of mentioned product earlier, you've got your equity and option trading, which can be at the enterprise level, and it can go cross-border. And how are you sharing that information, and where is it coming from? How are you representing that? You've also got a lot of firms dealing with affiliate transactions, and how are those being captured, picked up, and recognized by different regimes when they cross borders. There's the derivatives business, and I immediately think to the G20, you know, where Australia, Israel, USA, Switzerland, Hong Kong, Singapore, Canada are all trying to combine information off of, you know, ASIC, you know, CFTC, you know, FINMA, HKMA, MAS, OSC in Canada, MSC in Canada, and AMF in Canada. And how does it all combine? Because they've all been written differently. And even when they try to share, they all have their own needs. And then bringing it locally, you know, to the US, there are overlaps with trade and transaction reporting, including, you know, when I think just very simply in my own world, the ACT-TRF to CAT to Blue Sheets, and then part of Blue Sheets overlapping with Trace, and then we've already reported some options, but now you've got your opera positions, amongst others. We can go into a lot of detail there, but all these reports share information, but and often they come from many different places, which I know we're going to go into, and Steve mentioned the commerciality of this. Like, how do you do this right, because it is very expensive and very complex.
Okay, Steve, what would you add in terms of the overlaps? Perhaps we can concentrate here on Europe.
So thankfully, Europe hasn't diverged too much yet. I think that's it. You know, I think we're in a good space generally when it comes to particularly kind of markets transaction reporting, where there's been a lot of money spent on it. I think, you know, you're still in a space, even simple things where BaFin is often stricter at its interpretation of some rules than you know, the French regulator or the AMF will be. But I think in a world where across EMEA generally, or at least certainly within the EU, we're in a decent space. I think we're still seeing limited kind of variation when it comes to the big reports that cost lots and lots of money. I think what will be interesting, as I said before, is that as the interpretation of how you collect the more product orientated reports and mortgage data and things like that, so it's probably more in the retail and the kind of wholesale banking area, that things will diverge again, because if the FCA and the Bank of England make progress in their data collection work, the format and structure and the level of detail they ask for at product level will probably be very dramatically different to what it is today. But thankfully, however much people invested in EMEA and SFTR and all that kind of good stuff, that those have continued to be stable across the EU areas, which is obviously where most of the reporting comes from.
Okay.
But those overlaps are really important, because if you don't understand them, because that's part of the problem, is that if you don't invest in your data governance and understanding the data in the first place, you will make mistakes in the way you do your calculations, because as Brett said, lots of fields will be called very similar things in different jurisdictions, but actually they can be different. So a US bank moving into Europe, you can imagine, they will originally go, yep, I've got it all, I've got all this data, but actually the calculation engines behind it should have been different. It's a difficult place to be.
For sure. Let me stay with you and talk a little bit more about that understanding and identifying these overlaps. How important is it to do that? Are you going to just create more complexity by not getting to grips with this?
Yeah, I think it's one of those things where, and it depends how you lead your development of these reports as well. If it's led by IT, often in isolation, you can say, this is the field, the IT developer, pretty sure they know what it is. They've built something, it's got that data in it, it's fine, thank you very much. But it's when you unpick that and you unpick the rules and then you compare it across, as I said, SME before, the 3 or 4 other versions of SME you've got in your bank, all fields in the IT systems, particularly as Peter was saying, you're bringing legacy systems together as the interrelationship between collections starts to be better understood. And there's 4 fields that say exactly the same thing, but they've got a different definition of what an SME is. And so suddenly, if you take the wrong field, your calculations are way off. I mean, you could add 20, 30% to some of your numbers. And so if you don't understand the difference, call something EU SME, Canadian SME, US SME, or whatever it needs to be, because it's the only way you're going to get it under control. And certainly we saw a lot of data quality issues because people were submitting and you could see their calculations just weren't right because it just didn't work against the other data they've got. So those overlaps are hugely important, not just for the good of data governance, for the good of the bureaucracy of data management at times. It's because your reports will be wrong if you don't get it right, because there is so much crossover, at least crossover in nomenclature, not always alignment, shall we say, lots of crossover, lots of overlap, not as much alignment as we would like.
Okay, Peter, what would you add to that in terms of financial institutions identifying and understanding these overlaps?
I think most institutions, right, want to get their reporting right. I think the regulators have gotten a lot better at those cross-reg checking processes, right? So as they've built out their surveillance tools, right, and they come in and do like exams, they're getting far better at going across the reports and picking apart differences where things are overlapped, right? So if you kind of take, and when we look at regs, right, what we see is people have generally been pretty siloed, right? But the regulators, you can do this reg and you can do that reg in a silo, but the regulators are going to come in and they're going to look across these things. And if you haven't done that in advance, you have an enormous amount of risk, because normally what they'll do is they'll tie this back to the common books and records and then hit you with a books and records fine and a regulatory fine. So if you don't do this, you're kind of like left with a lot of regulatory risk, which is going to come back to you during your exams, may not come back in the daily surveillance processes of the regulators.
Okay, Peter, thank you. And staying with you, please tell us a little bit about the approaches financial institutions can take to manage the overlaps productively and in line with the interests of the regulators. As so far, we seem to have identified a lot of problems. How can people approach this to start some kind of improvement?
Well, I think you obviously, as firms, you have to have your siloed regs kind of in order, right? So that the foundation of building this up is, making sure you've covered the core regs, but then you have to take a sort of structured approach to going across the regs, identifying the overlap, and then building a program to actually police that overlap in a way that actually makes sense, right? And basically identify the differences and make sure that they're being checked on a regular basis and they're actually being fixed.
Okay, Brett, what would you add there in terms of actually approaches and the practicalities of managing the overlaps, productivity?
Yeah,
I won't say that again.
I mean, when I think of the approaches, I start with a data strategy, and needing a data strategy that meets the current and growing needs of your firm. and every firm is different. There are large firms that need to put a lot of proprietary, investment into their data. There are smaller firms that really can leverage a handful of vendors or a singular vendor to help solve a lot of their problems. And then there's everyone in between that needs to come up with some combination of a hybrid solution. But that data strategy really does need to be well thought out. It needs to be understood. It needs to be all encompassing, and the entire firm needs to be bought in. I'd say the biggest risks that come out when I think about these approaches is you try to go forward with a certain strategy, but then you solve one thing tactically this way and another thing tactically this way, another thing tactically this way. You have spider webs of risk throughout your entire firm that you haven't really well captured, and that could always lead to problems down the line. Then it really comes down to so you have your strategy, you fit your firm's ideals. Do you really know your data? Do you really know it, or do you have people who know it, or do you know where to get answers to what your data is and how to use it? And are you properly maintaining all that documentation, the technical documentation, the functional documentation, the operational documentation, and the supervisory documentation in coverage of all those changes? And now you can see where my world and my head goes, because I'm at that front line of first line of defense of how do we do this right? Having a document there are key SMEs and key person risk at every bank, and that stuff has to be shared, and that stuff has to be written down. And when you code to something, every person who creates some sort of code and some sort of logic does it with their own mindset attributed to that code, and you really need to have that in a layman's description that's fully well vetted and understood. And then once you have your strategy and you maintain your documentation and you have all your right hygiene there, you have to have all the right automated tools. You have to have the production workflows. You have to have exception management protocols that are in place to govern it all. No one's going to have a perfect system. No one's going to have a perfect solution. No one's data is going to be perfect, but you got to have the right rigor around it for governance, and never forget that last line. I think sometimes firms do a great job at strategy, a great job at the project and documentation and maintenance. But then if you forget those tools at the end that are going to empower your people to actually keep that going and prove you're doing it well, sometimes it's in the proof. How do you prove you've governed it to the regulator? Not just you are reporting. Now, how do you explain that you've done it right? How do you explain you've captured everything? How do you explain you're looking over when it's wrong, you're going to do something about it? And that's that last important step we really need to think in our approach.
Okay. Thank you very much indeed. I think it's time for us to run another poll question. This one asks, what are the challenges of data management across multiple regulatory regimes at your organization? So digging a little bit more into the issues of data management here. You can tick as many boxes as you like on this one that are appropriate to your organization. And while you do that, let me come back to Steve to share his views on these challenges around data management across overlaps of multiple regulatory regimes.
I think that, as kind of we said earlier, the regulators are getting more demanding in this space. So if you look at the CEO letters the Bank of England have distributed over the last couple of years, it is no longer just please attest that your report is correct and the data you've populated is correct. It's actually a test that the lineage all the way through to your core systems is correct. And you understand the translations, you understand the manipulation that's occurred in the middle of a 25-year-old system where the coding may be not documented in the way that you want it to. So, the regulator is now saying that when we come visit, and the US regulator has been probably slightly tougher in this space over the last few years, we're going to check that reconciliation, but we're going to check the reconciliation at every stage that you understand what's going on. So whether you get an S166 or worse, an S165, whether you're under some form of investigation from the bank now, they will mine your data, asking you to trace it all the way through. So if you don't have it documented, don't have it classified, don't have it categorized, don't have the translations understood, the regulators are going to start asking more and more, because let's be honest, there are a lot of firms out there that we've seen where most of the correctness of their reporting comes at the very end, where they're changing the report to make sure it meets the need of what they want. And you can't do that anymore. You've got to make sure your data management is holistic and is enterprise wide. And that's the biggest challenge, is that a lot of people have got away with data managing at a certain level, because, bluntly, it costs money. And now you've got to do it much more holistically across everything you do, which has always been the intent, but it's difficult to achieve. And I suppose because of that now, certainly, where we look at risk reward balance, That doesn't mean you have to map out perfectly all of the 6,500 system fields in an old system. What you've got to do is identify what are the critical or key items that are required for your reg reporting, make sure they are managed perfectly, and then the rest of the stuff you have to take a slightly more risk reward balance as to how much investment in their management you need, because it becomes an overhead that can swallow your entire budget if you're trying to manage everything at a really low level for every minor change across everything you ever do. That's just unfeasible for most organizations.
Okay, thanks, Steve. And over to you, Brett. How do you see the data management challenges here?
Yeah, I mean, look, we got to keep it all compliant and accurate, right? Challenge number one. There are regional business and product interdependencies with likely divergent formations. Like I've heard Steve say, and I've heard Peter say, like things get created from many places and they all have to come together no matter the product is based on the mandate. And the other challenge, it is more expensive and more resource required and more risk the more problems you have and the more inconsistent your data is. And if you can't get to that consistency, there are solutions even without that consistency, but they're more expensive, they're bigger, and they create a lot more risk to your firm.
Okay, fine. So data management is it here. Okay, excellent. Could we see the poll results, please? And Brett, perhaps you'd like to comment on these. This is what the people are saying. These are their challenges. What would you say to that?
Yeah, I mean, I certainly see a huge data volumes, number one, poor data consistency and accuracy, number two. I mean, it constant changes. Everything's been pretty much ticked. No one said no challenges. So I'm not surprised by that. At least half of everyone listening right now has every problem. And those are real challenges. And they're not easy to solve either. Certainly, these are challenging, complex problems before all of us, but they certainly need attention. And then we need smart solutions, and we need to be creative about how to make them as leverageable as possible. And I heard Steve say it earlier, how do you deliver something that's not just a value to your regulation, but a value to the firm? And I know we'll go into that a little more in a few more questions.
Okay, that's tremendous. Thank you. And before we move on, let's look at some audience questions, if we may. Okay, they're just coming up. Let me have a look here. Great stuff. Thank you. Okay, I'm going to put this one to you, Steve. It asks, please would the panel suggest a good place to start in terms of cross-regulation data management? Obviously, huge volumes of data, inconsistency, all the problems that are existing. So where do you start?
So I think the first one is pick your critical regulations and make sure you understand what they are, your critical reports. Make sure you have defined them, you understand it. Some regulators will make it really easy to define what you've got, and hopefully your systems have therefore been built that way, or at least your mapping at the point of creating the report has been done. But you can't try and do everything at once. You've got to pick those areas that you're most concerned about, pick the ones that you know the regulators are most keen about, but principally everything. And you've just got to expand from there. You can't just drop 30 data governance people in or data architects and go, right, I'm going to do everything, because you need a spine. You need to create a spine, whether it's about party data that Brett talked about, whether it's about certain products that you sell particularly. What is the spine that you can then slowly build clarity, shall we say, around that hub that you've built out? Because even if you buy the best data discovery tool, it's still going to ask you to configure it for your systems and to make sure it can understand it. And the self configuration stuff has got a lot better. But you've got to start small. You've got to start on a few areas, get those under control, learn the lessons of what worked for your organization, right size it, as Brett said earlier, make sure that people understand what you're talking about, because you're going to need more investment. And then you can start to expand it across the area and show the value. As we've talked about a few times, you can't do this just by saying it's because the regulator said so, because people will get bored and they will ratchet open gaps in your compliance because they can't see what it matters to them on a day-to-day basis. That's why the regulators come and visit, occasionally. So you've got to make sure that your messaging is right as well, so people understand why data quality at the point of input is important for a front office member of staff. When they never use that data item through the life of their sale, they've got to understand that, and they've got to understand the value that it brings to the organization.
Okay, thank you, Steve. And another practitioner question, this one to you, Brett, and it is about data quality. It says, data quality is an ongoing issue. How can firms improve this to manage cross-regulatory data successfully and in line with compliance?
I mean, data quality. So we're going to go into the solution question in a bit. And the first thing, especially with reg reporting, when I think data quality and reg reporting, did you report exactly what your books and records know? And how do you ensure that at the start, what was intended is what was communicated? There's a lot of hops, a lot of transformations, and a lot of things we do with our data down the line of eventually getting out the door for reg reporting, and that will all impact your data quality. So just to preview, we're going to go into this question in a little bit, but one of the first solution is fix it at the beginning. Get your data quality right at the beginning, and then refresh it, review it, and build controls around it. Now, that still won't make it perfect. So to help with the data quality, have a rules engine that does checks for you. Have a tool that can reconcile for you. Have systems that tell you when something is completely illogical or completely impermissible, that is completely inconsistent, so that you can do something about it. And then stay on top of that. But don't just look at the exception and leave it there. Figure out the root cause of that exception, fix it at where it started, and then your data quality gets better and better as you go.
Excellent. Data quality is something we talk about in pretty much every webinar and every event. Not to worry. Coming to you, Peter, here's one for you. And it says, what regulations fit together well here in terms of data consistency and accuracy? I guess the question is a little bit like the one to Steve. Where's a good place to start? What regulations can you manage the overlaps with reasonably well?
I mean, they're all obviously within a region, they seem to be a little bit easier, right? So if you look at the US, you've got overlap in your blue sheets, you've got overlap in CAT, you've got overlap in Ks. When you go across region, it gets a little bit more difficult, right? Because the interpretations tend to be even more vastly different across the regs, right? But I don't view, even within any one of them, they're all sort of nuanced, right? So none of it's really straightforward. It doesn't get easier, like really, because even in the US, there are different nuances behind the overlaps and how you deal with them.
Okay. Anybody else like to venture which regulations do go well here? And again, perhaps as per our first question, where to start?
I think whilst we're copping out slightly, as kind of Peter said, you can do lots of things. I would kind of get people to focus on a similar area. So it's not so much the whole regulation, but actually it's often easier to start with all your party data, for instance, because it's used across regulation. Get your party data right, because actually you're going to be having the same conversations with the same people about definitions and what you should be collecting and what it should be called. And it's probably much easier to start with a package of work rather than just trying to align, different types of market monitoring regulations or whatever it might be. I think actually, because if you can get the party data right, for instance, which is used across all your reporting, that will also help your frontline business. So, it again is trying to get the organization inspired, excited, enthused by what you're doing about fixing data quality or fixing data management. And the way to do that is to make it resonate and real to them. And that's why party data or product data is often quite a good thing. The minutiae of transaction reporting and the detail in the bottom of it, bluntly, a lot of people in your organization are really not going to care too much about it, even if they know they should.
Fair enough. And back to you, Brett, with another one here. And it's something we touched on earlier. It says, we'd like to do something like this. How can we build a business case and get management support and funding?
Yeah, I'd say, educate, right? In the smallest form, the more you educate your business on what the risk is, you allow them to understand and some of them will take certain risks, right? Different firms will handle that risk differently, and I'll put that out there openly. But you need to educate them on the risks and the history, and pay attention to where those fines, by the way, are coming down for each regime. And then recognize, based on those fines, take an assessment of yourself and say, hey, are we doing anything that looks like this? And do we need to now make a business case because we are, and now we have that risk? Or are they recommending something? If you think you're doing it well, but they're recommending some sort of governance, some sort of control, some sort of supervision that you think you could be doing better, pay attention to where those fines go and follow those fines, because those fines are, I mean, once one firm gets fined, that's just ammunition for the regulators to make a phone call to everyone else on their Rolodex and say, can you show me this? Can you show me this? Can you show me this? And it'll be the same thing they just learned from the prior experience. Now there will be a pocket of people who fall into the same category, and bring that to the business. And the business is going to go in one or two ways. They're going to approve what it will take to do it fully. Well, I guess it'll be three ways. They'll fully approve it, and they'll stand behind it, and they'll fully invest in it. They'll say, no, we don't believe this is a meaningful risk shared with compliance and shared with your supervision and surveillance teams. We think we're okay. Or some hybrid of, we understand there's a risk. We can only do this. What's the biggest priority? And be prepared to work at that in a priority-based order. What's the biggest risk? Take that down first.
Okay, thank you. Thank you. And another for you, Peter, this is something we will come back to, but to answer the question now, it says, where and what is the real ROI beyond compliance of achieving cross-reg data consistency and accuracy? As everybody said, it's very expensive business, this reg reporting. So where is the real ROI?
Well, I mean, obviously there's some ROI on the operational side to getting it right, but if you look at the overall spend, and I think Steve kind of touched on this, right? The real ROI that we see firms focused on is not on the operational benefits of getting the data right, even though they're kind of there. I think the next big push is going to be across firms tackling the siloed approach to the regulatory frameworks and trying to put in more common tools, which allows you to achieve what you need to achieve, but reduce the overall cost globally, right? And in order to do that, it requires a pretty unique set of software to do that. But that's the next big push we see, and it's really a reduction of this compliance spend globally.
Okay. Thank you very much. Steve, there's a question that's asked specifically to you, and it is quite specific. It falls back on the FCA slightly. So if you choose whether you want to answer it or how you answer it. Are you ready? It says, a question for Steve. In your opinion, why is the FCA or the NCAs across Europe slow to validate accuracy and completeness of transaction data submitted and firms are reprimanded? Do you expect this to change?
So I think I won't talk specifically about any failings on any part of any NCA, but certainly if you look at the data strategy the FCA did in 2017, which I helped to write, the investment, and Nikhil, the CEO, has been very open about this. The investment is there to help the regulator become more data-led. The volumes of transactions in SFTR and EMEA outscale MiFID by a factor that's not small. And so the scale of volume of data that's come in, it's very difficult, particularly the UK and some of the larger kind of regional NCAs, where the volume is so different to some of our European colleagues that the systems required to build them, actually, you can't buy them off the shelf. You know, they are things where, you know, they talk about rules engines, and Brett and Peter have both talked about it. Effectively, you have to create a whole data quality framework for the reports you're receiving, let alone the data you're using as an organization. And that's not an easy thing to do, particularly when the types of failures you see are not something you can control, because it depends upon the enterprise level systems that are pushing the data in the first place. So I can see, you know, being at the other side of it, it's not an easy thing to try and identify all of the DQ issues that exist across all the different formats of different reports. What I would say is that in my time in the FCA, though, we did start to look at how do we automate that DQ identification of the reports that come in. And certainly some firms will have experienced a notable uptick in FCA commentary about the quality of their reporting. I think there was an example of one regulator where they'd seen a submission that was exactly the same submission 3 years on the trot, and it wasn't an EU regulator. And once they spotted that, it suddenly set a fire amongst the regulators, which was, would we spot it? And so you know, so there is certainly an intent for the regulators to do this as fast as possible. But it is really, really hard. If you look at how much money some of the banks spend on DQ services, the regulators don't have those budgets. So it takes a lot of clever thinking, a lot of practice, a lot of experience, and bluntly, it's required the data analytics and data science capabilities which have evolved hugely in the last 3 years to have caught up. And I think now the regulators are really looking at how they can use data science techniques to do this in a much better way than they've been able to do historically, just because it's just a big job.
Okay, thank you. Thank you to our audience for your questions, and thank you to our speakers for their answers. And back to my questions, and one for Brett. What types of RegTech solutions and services can support cross-regulation data consistency and accuracy?
Yeah, so I mean, look, we went into some of this to some degree. When I think of the type of solution, getting your data right at the start is where it begins. Obviously, having reconciliation and control tools and functions across all the data lineage. If something's going to change and something's going to transform, how do you know it's complete? How do you know it's consistent? Make sure there's something there that does that. And then exception management workflows, and this is where I think we really need to evolve to, but exception management workflows that speak and replay remediations, not just downstream out, but upstream. So if you are making a change, it can then be brought back through to your books and records and captured and stored and then accurately represented from that point forward, as opposed to just in your downstream system or just in your regulatory reporting system, but actually upstream as well to wherever that source data came from, be it your risk systems, your order management systems, or your data warehouses and data lakes, whatever you might have built out. That communication in both ways is going to be where I think we need to evolve to save time and money as well.
Thank you. Peter, you're obviously very involved here in helping people resolve these problems. What kind of RegTech solutions do you have that can help people?
Well, I mean, it's kind of the core of our business, right? It's sort of large scale, high volume data checking engines, which are adaptable to the different regs, but not sort of something where if you're changing the data or changing where the data lives, you can't be going back and recoding things, right? So it's moving away from this siloed approach and having a flexible toolkit, which really can deal with the volumes and deal with all the requirements across the regs. And then once you've identified where all that overlap is, you kind of have to have a plan for applying that kind of technology and basically push that across your infrastructure to help you sort of cover the risk and figure out like programmatically where the errors are. Where, they've traditionally, right, they've taken a sort of bespoke sort of, okay, let's do some testing, sampling type approach to this. And when we look at it, we kind of view it as something where sampling is never really going to get you where you need. You have to check all the data, but that requires a massive amount of performance power because normally you're looking at your transaction data 2 and 3 times, right? So it's not easy, right? But
okay, very big challenge. Obviously, we keep coming back to this. So let's sum it up and put it all together. And coming to you, Steve, Brett's talked through some of this. Would you please gather together everything we have been talking about and provide us with step-by-step guide to achieving cross-regulation data consistency and accuracy? Obviously, as I already said, it's very difficult. It's not 100% possible necessarily, but how would you suggest people go through this?
So as we kind of talked about, I mean, clearly this step-by-step guide is going to be a bit high level. It kind of identify the first bits you need to get right, whether that's because of risks that you've seen, whether it's because of, as Brett said, the regulator, is chasing down a certain area, but focus on an area that you can prove to everybody you can get right. You can prove the value, you can prove the benefits, can show, a regulator if they come and say hello, that you've got you're on track, because certainly a lot of the European regulators, if you get one area right and have a plan to get the rest right, they'll be a lot more forgiving around kind of where you're at, because at least you've got a remediation plan and you've got a strategy in place, as Brett talked about, a kind of strategy that you've proven. So the first thing is, don't worry if you can't fix everything at once, but you've got to do something. So focus on an area that you think you can control, that is usable, that is useful, where you've got good business buy-in to that front end validation, where as the guys say, you've got to get it right at the start if you want to avoid a whole bunch of cost and pain, flowing downstream from your systems. I think if you can get that right, you should then be able to, as I say, excite the organization. And it's not just about from a compliance perspective, from the second line or whatever. You should be able to see analysts who go, actually, that data is more understandable now. I know where it comes from. I know how it's translated. And so the benefits around some of your MI and some of your kind of, if you've got data scientists in your organization, they will slowly start to see that that data you've managed to get your arms around better is categorized better. They do understand it. You should then start to see that IT delivery is quicker because you've already got it mapped out and designed, which, you know, often you'll spend the first 6 months remembering what you did 6 years ago on some data fields. So, you know, by controlling that one space and getting it right across the ecosystem, across the life cycle, you'll then be able to go, okay, I now know what I need to do for the organization. The strategy is valid. I now need to extend it. That for me is a much better approach than trying to do a thin slice of everything where you try and do 50,000 foot lineage by just going, this data set's here, this data set's there, this data set's there, and don't get underneath anything, because that's not good enough for the regulator that wants a field by field assessment that you understand what's going on. So, you know, it's not quite a step-by-step guide, but I would certainly encourage people to focus on one area. And it can be a big area like party, you know, it doesn't have to be just one single kind of report or one single kind of activity, but get that right, prove your methodology. Because if you start across the larger organization and your methodology is not right, or your skills aren't right, or your governance isn't right, you're just going to spend 2 or 3 years fumbling around, and it's not going to work. And if you do smaller data sets as well, often the tools that we're talking about will be cheaper for smaller user bases or smaller data sets or whatever. So again, you can prove that the technology is for you a better fit, and then you can scale as you do everything. If you go after everything straight away, you're paying those big license costs straight away, even though it's not configured properly maybe, and it's certainly not tweaked.
Okay, that's great. Thank you. Peter, what would you say there in terms of, you know, step by step, what people should be thinking about here?
Well, I think you have to make sure cross-regulation is part of your plan. I agree with Steve, right? It has to be something that's on your radar, but it has to be a prioritized list of, you know, where those data elements exist. And I think you need a risk-based sort of strategy for going and addressing it, and not, you know, absolutely not a big bang kind of thing you need to do or should do. You need to figure out where the overlap is and basically put in place a program to sort of, from a priority perspective, put in place some governance and cross-system controls to get that data right. Make sure you know when it's not right.
Okay, thank you both. We just about have time to run a final poll question. It is, what are the business benefits of achieving cross-regulation, data consistency and accuracy at your organization? We've touched on the fact that there can be business benefits, so please vote in the poll and tell us how you see these business benefits. And again, you can tick as many boxes as appropriate. And while you do that, let me come to Brett to look beyond compliance and talk about the business and operational benefits of getting this right, and perhaps the penalties of getting it wrong.
Yeah. So, I mean, when I think of the benefits, they come down to, and it's been a theme, it's less expensive to do it right. You're not going to get fined. It'll be consistent. You should have less exceptions, less resources required, and all that summarizes up to less risk. And that's what we're all really striving for at the end of the day. The business wants things to be less expensive, of course, and be commercially valuable, but we all as a firm, as an institution, want less risk. And to do this right means less risk. Now, to do it wrong, obviously there's the fines, there can be suspension of your business, there's reputational impacts. And I mean, even something we haven't brought up, but thinking in the environment we work in today, I mean, people in this world are looking, I feel like employees expect more than ever before. And we want to be creative. We want to do smart things. We want to be innovative. We want to evolve the structures. Dealing with the inconsistencies and the problems is also a people problem. Nobody wants to be managing as their career exceptions. Nobody wants to have to do things that can be digitized. They want to be able to do creative things that evolve their career, help them learn. And you will lose people if everything is inconsistent. And that should be considered as well. I think having a culture where you're solving problems, not maintaining the risk of problems, is a better culture.
Okay, thank you. Over to you, Peter. When you're out there in the market talking to firms, where do you see the business and operational benefits of getting this wrong, and what are the penalties of getting it? I got that the wrong way around, didn't I? The business benefits of getting it right and the penalties of getting it wrong.
Yeah, I mean, again, beyond the regulatory, the operational side has some benefits, but beyond the regulatory, I think Brett's right in terms of reducing the risk up front, but that risk for the most part comes back to regulatory risk when you get it wrong, right? So the cost of the regulatory side of it is so much greater than the operational side of it that I really think it's more of a regulatory risk view of it than operational.
Okay, let's see the poll results and see what our audience is thinking. And Peter, perhaps you'd like to comment on these results. Okay, well, yeah, we might expect the first one. What would you say, Peter?
Well, I mean, yeah, that's the, if you can achieve that first part, right, and reduce your risk and penalties for the firm, that's the core goal, right?
Okay, fine, yeah. And would you agree with the following two there?
Yeah, yeah.
Excellent. Thank you very much indeed. Okay, and coming to our final item in today's webinar, I'd like to ask all our speakers to offer some advice for practitioners working on or planning to work on cross-regulation data consistency and accuracy. We've talked a lot about it and things you could do, so let's try and pull this together with some advice that the practitioners can think about. Steve, please would you kick off here?
So I suppose just, I mean, what we talked about before is, you know, focus on an area you can control. Hopefully, as Peter said, that's prioritized based on your known risk. But I would also, whilst clearly the benefits from a compliance perspective are the, you know, the majority thing we're talking about here, if you get it right, and this is part of your business benefit and part of your strategy actually, is that you are not going to automate business processes if you can't trust the data. So you need to classify, you need to understand it, you need to define what good looks like. All the stuff you need to do to get your compliance position right is also required for automation and often digitalization of your business. So if you can lay those foundations in an area which is important from a compliance perspective, but perhaps as a nod to an activity that the bank would like to do or your financial institution would like to get after, you will take the business with you so much more than just your risk people and your compliance people and your regulatory reporting people, plus your senior leadership, obviously, who care about the fines. If you want to take your middle management with you, you've got to explain to them, by getting this right, by understanding your data, change is quicker, change is cheaper, automation is allowed because you wouldn't want to do it, decisions can be trusted more. And so you've got this real value chain across it, which is overawed by the compliance risk, you know, clearly, particularly in the US, the compliance risk, I think, because the fines are so much larger often. But if you get the messaging right, everybody cares about the fact your data is understood and of a decent quality, not just the people whose job is to care about your risk or your compliance position. I get everyone should, but principally, you know, certain people do more than others. If you can get that messaging right, you can get everybody in your organization interested in this conversation. It's not dry if you can show them that it helps your decision making in your, you know, the way you work as a bank as well.
Thank you. Brett, some advice from you, please.
Yeah, I mean, 3 pieces of advice. I mean, believe in digital transformation and enact it, right? Know your data and systems and before creating a solution, and document everything. And then, you know, find the right people, partners, and vendors to build a long-lasting relationship with. You're going to need each other. You're not going to do it alone. There's no superheroes left independently doing this. There are teams of superheroes maybe, but you're going to need partners, and you're going to need tools and vendors along the way to help you solve this and to check every box that you're going to need to be completely consistent.
Excellent. Thank you.
As you can.
Excellent, thank you. And Peter, some final words from you, please.
I would say try to take a step back from the sort of day-to-day, take a holistic approach to looking at the challenges for your company on a broader scale. Try and bring in the right people and the right parties to that conversation to make sure you try and build a view of what those challenges are. And then try to find a toolkit which actually is more appropriate to a broader challenge than maybe some of the siloed approaches which we see people taking, so that you can try and solve these challenges. And it's not big bang, but you try to solve them with a view of this is what the going forward looks like going into it, as opposed to just keep patchworking things in a siloed approach.
Excellent. Thank you, Peter. And thank you to all our speakers for sharing their expertise and experience. Thank you too to N-Tier Financial Services for sponsoring today's webinar. Before we close, just a few A-Team Group things you might like to sign up for. You can register for our forthcoming webinars covering best practices for creating an effective data quality control framework. And the time is now for buy-side firms to reevaluate their approach to data management. You can also download the 10th edition of our must-have regulatory data handbook. I wouldn't say must read, but it is a must-have. Anyway, that said, that's it for today. So thank you again to Steve and Brett and Peter, and thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear from you and improve our products. Meantime, thanks again and goodbye.